Double cab pickups. What has changed and what is coming in 2025? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Double cab pickup trucks. We've had some big changes to them. Now, this all happened in the autumn 2024 budget, where they made a very definitive change on what was happening. Now, for anyone who may have been following the news on this, it was not necessarily anything particularly new, as it's something that the Conservatives had proposed earlier in the year, but had dropped. But the Labour government have decided that they are going to make a significant change to double cab pickups, and that they are no longer going to be allowable as a company van, and they are going to be a company car going forward. Now, this area of cars has always been slightly grey, as it's that determination of what is a car, what is a van, how does it fit together, what is the definition and where is the cut-off point. And double cab pickups have always been at that cut-off point of what is and what isn't, and the manufacturers have been skirting to try and make sure certain ones are and certain ones are not, so it allows them to be selling appropriate vehicles. The benefit of these vehicles has always been that they've kind of had a dual purpose, that they can be used for business, but there is enough space for the family and to be used for a personal point of view. This has led them to have a mixed use, which has always been questionable under tax law of what is it being used for. Is it for business? Is it for personal? Now the rules that they are bringing in have significantly made this very clear of what they are going to be going forward. The key dates we therefore need to be aware of are the 1st of April and the 6th of April. The 1st of April being for corporation tax purposes when the changes kick in, and the 6th of April for individuals for income tax where the changes are going to be kicking in. And this is the 1st of April 2025 and the 6th of April 2025. And the double cab pickups with a payload capacity of at least 1 tonne will be classified as cars going forward. This will then determine how the capital allowances are made. This is the benefits in kind, and also some other specific profit deductions that will need to be made. The key impact here is that the tax charges on the benefit in kind are going to be higher. There'll be increased national insurance charges for employers, and there'll be reduced capital allowance benefits for companies and individuals. So let's dive into each of those a little more. So our benefit in kind at the moment is being done as a van, and a van benefit is set at around the 3,000 to 4,000 mark at present when this video is released, which means that is the total value of the benefit, which then the individual is taxed on at the appropriate tax rates. And there's class. The change is making these cars, which means now it's going to be based on the list price of the vehicle, which is obviously going to be higher, maybe 40, 50, 60,000, whatever the list price of the vehicle is. And it's going to be at a percentage rate based on the carbon dioxide emissions. So whatever CO2 emissions are, that will determine what percentage is used. But those percentages tend to start at 15, 16% of the list price, which obviously compared to 3,000 as the benefit, compared to maybe 50,000 at 15%, we're now much higher in terms of the benefit that is being charged back to the person compared to what we were before. This is making it a much more expensive benefit for that sort of vehicle going forward. The individual will be paying tax at the 20% or the 40% or the 45%, whatever is the appropriate tax rate that will be chargeable. For those running it through their own companies, this may minimise what dividends you can take out of the company to take account of that increased benefit, so that you're maybe not going into the 40% higher rates of tax, or maybe taking you over the 125,000 tax limits for minimising what income tax you're paying, depending how you're structuring the money you're taking out of your own company. For the company, the employer themselves, they will be paying higher national insurance payments, normally Class 1A national insurance contributions, And this is because, again, it's based on the value of the benefit. So we've just said it's going from 3,000 to 4,000 up to whatever figure it may be based on the list price of the vehicle and the CO2 emissions percentage, which means the value is definitely going to be higher. So we might be going from 3,400 to 10,000, which means we're now paying Class 1A national insurance at the rate that is applied in that tax year on that benefit of 10,000. So if it's 13-14%, we're now paying £1,400 rather than a couple of £100 national insurance. So there is going to be some significant increases in the national insurance that is payable. The final bit was our capital allowances element, and for vans we are allowed to get full capital allowances available, including the annual investment allowance, or if it's energy efficient we might be getting even better things with first-year allowances. As a car, you can't claim annual investment allowance, you can't claim first-year allowances unless it's an electric vehicle. So now we're down to our writing down allowances, potentially in the special pool. So you're either looking at 18 or 6%, depending on the vehicle and depending on the condition at the time when this vehicle is purchased. So from having full allowances available on the vehicle down to potentially worst case 6%, it is quite significant changes that we are seeing with this type of vehicle. So it may be assessing whether this is the right vehicle for you going forward. Now, as we know this is coming, there is going to be some transitional arrangements. So anything that is purchased, leased or ordered before the 5th of April 2025, the existing arrangements will be in place. Now, the arrangement will last until the vehicle is sold or scrapped, the lease ends, or until the 5th of April 2029. So they have given us a finite end date of when things will change permanently and we won't be going back or using the previous rules at all. And of these, it is whichever comes first. So if you have a vehicle and you keep it going and you own it past 2029, the fact you've not sold it doesn't mean that the old rules will still apply to you. The new rules will kick in from 2029, 2030. That is the end point. So it may be you're looking at changing the vehicle before then so that those new rules don't apply to a vehicle that you still own at that point in time. The idea of the transitional period is really to help businesses get set up and get in place for the changes, because if you've got a 3-year lease that you signed last year, then you've still got 2 years and you're going to be within the new period with an old vehicle. So when the lease ends, that gives you a chance to review what you want to do, whether one of those vehicles is right for you going forward, or whether you shift to maybe a van itself rather than a double cab pickup, or you go to a car but you do it privately. There's a few options, but you can make that decision with time to figure it out. For anyone already with a double cab pickup, you may just need to be aware of those transitional rules and decide as you get to the end of its useful life for you what you're going to do and how you're going to replace that going forward. Anyone who was thinking of getting one, you need to get one by the 5th of April if you're going to be on the existing rules. And if it's not by then, you need to know exactly what you're going to be facing with the rules going forward, so you can just be aware that it is the right decision for you and your business to be getting that type of vehicle. Hopefully today you've discovered exactly what is going on with double cab pickups and how the tax changes are going to affect you if you're thinking one of these vehicles is for you. Please like the video and do subscribe to the channel, and let's make tax less tax.